Hello and welcome from me, Philip Nothard, and Curtis Hutchinson to this special Motor Trade Radio podcast interview brought to you in association with eBay Motors Group.
Regular listeners will know from last weekend's podcast that CAP HBI has revised its average used values downwards by 2.1% for October. So our guest today will provide an update on what prompted the move, how the rest of Q4 is looking, and share some thoughts on whether the lockdown in England will have an impact on values. So a warm welcome to our special guest today, Derren Martin, Head of UK Valuations at CAP HBI. It's great to have you back on the podcast, Derren.
Thank you. Yeah, good to be back. Thank you.
Hi, Derren. Well, I mean, again, as Curtis said, welcome back, and obviously busy time for you this week. I think it was after the weekend's announcements, but you know, we last caught up back in the beginning of October when you kindly shared some of your views on the used values that were trending going into the fourth quarter, and obviously we're now in this fourth quarter. So since then, we've had people are sort of talking about a correction, but we've had this kind of drop in values and a bit of a realignment to the market as was expected, and I think you talked around for the fourth quarter. And can you talk us through some of the reasoning for that move and some of the data and analysis behind it?
Yeah, we've moved values down during October. So in our live products, values moved down by 2.1% on average, and the reason for that mainly is it's what we've been seeing in the trade data. The data that we get from around 50 sources has shown that the market has dipped away. I think businesses are being careful about what they pay in the trade. Bearing in mind we're going into a fourth quarter, prices are already high, and economic situation and things like that. Bearing in mind, obviously, October was before any announcements were made, the movements we made before any announcements were made at the weekend. So values were already dropping in the trade, not so much so in retail. So trade does tend to move first, and I think there was some reluctance to pay previous high prices, being a little bit careful. So that's probably a bit of a summary of what we saw during that time. So it was an interesting month. We predicted that values would drop. That 2.1% is quite a big drop for the month of October going into November. But put it into context that values have been strong over the last few months. So it has to be put into context.
And it still remains fairly high year to date, doesn't it? I mean, that's where again, putting it into context, it's still a fairly strong position from a full year trading perspective so far compared to a normal period of trading.
Without a doubt. So values, tracking back from over a 12-month period, values are between 3 and 4% higher than they were this time last year. And that's tracking the same vehicles at a 3-year, 60,000 mile point. So the same type of vehicle at that age compared to the same vehicle at that age last year. That doesn't generally happen. Cars will deflate, cars will depreciate as they get older in their life cycle, and supply and demand nuances and things like that. So for them to be ahead of where they were is unusual. It's obviously off the back of a very unusual year. Now they're starting to come down, but there would have been businesses that would have been writing them down by around 5%, and then they're 3% up. So as you can see from that, there's still some room for cars to be sold, and businesses to still make more than they were expecting to at this time of year.
And Derren, in terms of the values, what trends did you see across the various vehicle sectors? Were there any winners as well as losers?
We generally saw, you always get winners and losers when the way we look at the data. You're looking at individual models, individual generations, and it's all down to supply and demand in the used car market. So there will always be some winners, but generally most things moved down. City cars and super minis were probably the most heavily affected in percentage terms, coming down between 2.5% and 3%. Which in 1 month is quite a big drop, but those are the cars that went up by the most over the last few months. So what goes up must come down is generally true with used car values. So they've had a little bit of a realignment. Some lower medium cars, that's probably the next one that's come down the most, 2.5% for lower medium cars, which is sort of the Astra Golf Focus size vehicle. And we've also seen hybrids continue to probably be the weakest fuel type. So hybrids, not necessarily unpopular, but they are just seen as too expensive versus their petrol and diesel equivalents. So they came down slightly more than the average. So it's generally a picture of things going down. Probably one of the strongest was large SUVs that actually performed okay. So they only dropped by 0.5%. So again, that's not too much. So yeah, it's probably the smaller end that was most affected. We also saw a little bit of strength on younger used cars, where maybe people were, or dealerships were switching from new into used due to longer lead times and things like that. So they weren't too badly affected either.
And in terms of the market, how has it been? What's the response been like from obviously dealers and the wholesale market? Because I think you say it was we knew it was going to start to ease. We know the fourth quarter of the year tend to be a little bit softer generally. Was it a welcome move? What's the reaction so far to the figures?
Generally, when you do drops like this, because that 2.1% is quite a big drop when you put into context of previous months. Usually the phone is quite hot and ringing and finding out what's been happening. That's not necessarily been the case. We've had very few manufacturers that queried the movement. Dealers, if they're close to it, will know what's happening in the trade. They'll know that this was coming. As I say, I don't think retail values have been as heavily affected as trade, but they've seen it happening in the trade market. So there's no real surprise on this, and I think I'm not necessarily sure it'd be welcomed, but I think probably people were expecting it.
And Derren, I noticed in the press release, which only went out last week, you hinted at a further value drop in November. The world's moved on since last week. We've now gone into lockdown for England. So, is this still on the cards? This further drop in November?
In my opinion, yes. The early data that we're seeing from sort of back end of last week and early this week would suggest that there will be continued drops. We don't see it dropping off a cliff. There are, from obviously the announcement was made on Saturday. The first 2 days of this week have been quite strong. There are some cars being sold cheaply, but there are also volumes being sold. And what we're seeing in the data so far is that they overall values are not dropping dramatically, but they do continue to decline. So I would continue to say that I think values will come down over the next few weeks. Mainly because of high previous prices, some of those demand factors now disappearing, pent-up demand, people buying to avoid public transport, those sorts of things have probably happened. And in quarter four, it always tends to drift away with prices. People start to turn their minds to other things towards Christmas. And obviously, you've now got the economic impact, which was always going to be felt. There was going to be the end to furlough. It's now been extended, but there's no doubt that there will be an economic impact and people being a little bit more careful, with consumers being more careful. So I would continue to say that I think values will drift away. There are some cheap cars being sold out at the moment, and I think prices will drop, yes, but we will purely reflect what we're seeing. I don't want to be one to talk the market down. It's just what we're seeing early days at the moment. Things could change very much once we go into full lockdown. So it will be interesting to see what the situation is next week and beyond.
And the big question, obviously, you mentioned it there in terms of lockdown. We had the announcement on at the weekend, and obviously it comes in action tonight, this evening, as we're recording today. And so, there's a lot going on and lots of conversations. As you said, you've been a busy week this week so far. But what impact, if any, will lockdown have, do you think, on the valuations in England? And I suppose more importantly, what is your stance? Because I think that's been the key message I think this week from yourself on interviews you've been doing, is what you're doing with the values, because obviously everyone's looking back to what happened during the first lockdown, and we're now on lockdown 2.0. Can you share some thoughts on that one?
Yeah, so when we went into lockdown at the end of March, it was a very different situation. People were told so people were basically stopping going to work. The auctions kind of stopped straight away. Car dealers closed, and most weren't set up to do click and collect and deliveries, and also they weren't even sure that they were allowed to do those sorts of things. It was a very different situation. We've now got used to this, and auctions will remain open, and we've spoken to a number of those this week. Car dealers will stay open as much as they can. Some of the smaller ones may well close and furlough staff if they feel that they can't, they won't get the business in during this time. But dealers are open for click and collect. Auctions, some of them have reopened physically, but they will now stop doing that. It will remain online. The way the auction industry got set up to be purely online during that sort of April-May period, that was as a testament to them. So that will continue, and there will still be cars being bought and sold. The consumers will still be able to go and buy. Dealers and car supermarkets and the like will still get to buy trade. So that will continue. So I think volumes will drop, but we will still have enough volumes moving values. So we will not be pausing anything this time round, and we'll be being moved, and we'll see what happens, basically, because we will be reflecting that. So we look at retail advertiser data, we look at trade sales data, and we'll be continuing to do that. And we've got a team of experienced editors that will be continuing to do that. So for us, it's very much business as usual, although a little bit unusual times, and we'll be seeing how things go with regards to valuations back through the month.
Great.
Yeah, and finally, Derren, seasonal trends have pretty much gone out the window this year, along with just about everything else. But we're now in the final 2 months of the year when values and demand traditionally drop in the run-up to Christmas, and it's hard to imagine that not happening this year. So just looking ahead, what trends are you forecasting for Q1 2021?
There'll be a little bit of a pickup in January. I see values is dropping in sort of right up to Christmas, but as I say, not dropping off a cliff as things stand, although that will depend on vendors too with their prices, and then obviously how much they're retailed for and that type of thing. But I do think January will be a bit of a pickup. I think there could be people, businesses buying cars now, and over the next few weeks for January, if they can hang on to them until then buying over the next few weeks and then selling them in January would seem to be a good move. Obviously, there's so many unknowns though, with the pandemic, with Brexit, what will happen with all those types of things. But I think there will be a pickup in January, and I think the first quarter maybe okay. We do get maybe weakening again after that, when there's more volume coming into the market from previous years and from the lease extensions that have happened over the last few months. So personally, I think it's a little bit of a rundown into Christmas now, and then pick up in January. But we've never been in this situation before, and who knows how long the lockdown's going to last for. Fairly confident we'll come out of it on the 2nd of December, but a lot can change in that time. So it's that'd be my view, that it will be maybe a tough few weeks for prices, but maybe some stability and a little bit of a pickup in January.
No, I mean that's good insight there, Derren, and thanks for joining us today. And it's a very brief call, and I think your mobile's starting to give up a little bit and ready to. It's been burning all week, I suspect. So I think you're right. I think a lot of this needs putting in context. We are in the fourth quarter of the year. We are approaching Christmas and everything else, and we're not in the same lockdown as we were the first time around. So I think there's everybody's got to take a pragmatic view with this and put everything in context. So I mean, just for me, I appreciate you coming on, and I think you're right. This is it's key to share this information to listeners, because as you say, a headline figure doesn't necessarily tell the whole story these days, and we are in an unusual and a very unseasonal marketplace. But I mean, just thanks for coming on today, and thanks for sharing your insight.
That's a pleasure. Thanks for inviting me.
Well, many thanks, Derren, for a welcome update on how used values are trending at the moment and how Q4 and Q1 could start to shape up. That's all we have time for now. You've been listening to this special Motor Trade Radio podcast interview brought to you in association with eBay Motors Group. Do join Philip and I for our weekly roundup of the latest industry headlines, which will be available from Saturday morning. Until then, thank you for listening and goodbye from us.